Hey, Julie, Kevin, Anthony.
Hey, how's it going?
Oh man, doing awesome. Um,
Hey,
yeah.
how's it going?
Hey, Kevin, missed you a couple weeks ago. How you been?
Pretty good. Sorry about that. Yeah, had a other event that popped up on my calendar. So,
That's always okay.
I'm on the phone. I'll
Um,
be there in just a minute.
oh, okay. I thought maybe I was muted or something.
No.
Very got me twice there. I was like, oh, right on. Okay, I'm catching my breath. I mean, I just took a power nap for one, but man, we got a foot of snow last night.
Oh,
And then
okay.
I got on the wrong side today of the trade, and so I ended up having to work for 6.5 hours. And then I went out and moved a bunch of snow, so I'm tired.
Mm, okay.
Yeah. Yeah, I got on the wrong side today. It's sad because the today was so repeat. The market has, to me, been very consistent for the last couple of weeks. Let me bring up TradingView and I'll just kind of start with that because with what we've been discussing as a group and what I've been executing, there was nothing different from today. Today should have been a profitable day. And it's as simple as, let me go ahead and share my screen too, and then I'm going to turn it over to you guys because I want to hear what you guys are doing. Da-da-da. Okay, are you seeing Trading View?
No.
no.
Yeah. What were you seeing?
Look like
You're
what's
seeing your
that?
bank account with the account numbers? No. Just screenshot that? Yeah.
Yeah, there you go.
Yeah.
There we go.
There we go.
Okay, very cool, very cool. All righty. All right, man. I sound like a broken record, but it's a good thing. And what I mean by that is when we come together, it's like we're talking about the same thing over and over. And I'm definitely open to kind of talk about some other things. Matter of fact, I was thinking last week when we hung up, I was gonna like Anthony. I'd almost love for you to lead one of these Tuesday group and kind of walk us through a day in the life of Anthony of trading. So think about that, and maybe in a couple weeks, if that's something you'd be happy to do, I know I would get the popcorn and I'd love it. So, because I think it's real important that we see some other perspectives, but where I also think it's most important is it doesn't matter what your strategy really is. Are you focused on just that, and trying to become a master of one strategy that you resonate with, that kind of aligns with your risk profile and what you're comfortable with. That's the most important because what is fascinating to me in the past few months, even kind of talking with my wife, is what where I'm trading now. I can't find it anywhere on the internet. There's not a YouTube out there, and I've tried a lot. Now there's a lot of tools, a lot of things, because a day doesn't go by where I'm not listening to someone else. I want to learn, and I grow. It's just part of my education, but there really is no strategy out there that someone else does that has really worked for me. Um, and so where I'm hoping that we're going, and it's, yeah, there's strategy, and we're going to hit a couple things today to kind of even better define specific entry criteria. But when we have our 15-minute opening range, that's one big piece of the pie right there, because as price is up and away, you know, that's you can make a living off of just that. You know, when if it comes back down, well, it's no longer up and away. So once you're up into this part of the area, if price does come back down below this 15-minute, if you're still long, okay, it's gonna probably hurt you in the long run. Now, of course, you got this right here, and this is what really kind of I have to laugh at, because I studied this last night, and it's nothing more than we've got the lower limit of our 15-minute opening range. We come back up. Hey, we don't really have the follow through on this first 5-minute candle, but where does everything consolidate and bounce? Right off of support, right off of our VWAP. VWAP to me is this it's the controls. It all my decisions for that day are really based on what is price doing as it pertains to this purple line in here, VWAP. Am I long or am I going to be short? And then, of course, I'm executing based on this white 5 EMA. But I just have to laugh, because the most beautiful 50%, coming back into our 15-minute opening range, and this is textbook. Anthony's probably, Jake, how did you miss that? If I wasn't done before the US market even opened up today, I would have probably funded 3 accounts. But I mean, that's how I'm laughing. But I did recognize it earlier, but because of last Thursday and last Friday, we literally, and this morning, below VWAP, above VWAP, below VWAP. Okay, we've talked about that quite a bit. So I got locked into a fade or a rotation back into VWAP, and I was just waiting all session for it, and it just never happened. Lost right at $100, which I'm thankful, because it was on all my accounts, but it was only $100 today. And that's why I just 7 hours of sitting there and lose. Yeah, so I'm tired. It wore me out, but it's frustrating, because this right here should have said, okay, you're long until your VWAP. I mean, right here, you're up and away from VWAP. You're long until you're the 21 EMA never did point down. There never was a reason to go short from an execution perspective. Never. And in fact, here's where you're going to go in. Here's your best setup of the day. Really is right above 5 EMA. We're bouncing off of VWAP. We're in there. Let me get my thing. We're in above. We're right back at our 15-minute opening range upper limit. Broke through it. Bounced off of VWAP. Minimum should have been 15 points right there. And the reason I'm saying minimum is because, hey, we don't know, is this going to come back? It's possible range day. This red candle indecision got taken out here. So the worst I'm going to do is 15 minutes. So now I'm waiting, and then I'm like, wow, price is making higher highs here. Here's my first band derivative off of my VWAP. So that's what these dotted lines are. Dotted lines here and here. I'm kind of watching what price is doing, how it interacts with those bands around VWAP here. Well, now we're off of the 21, but this VWAP deviation band is holding as support. We're right back in here again. As soon as we're in above that, here's our first shooting star. Well, there's another 13 points done for the day at that point. And that's been the model since we were together 2 weeks ago. And I've just been refining that and continue to work on that. And it's really working well. I'm not changing from that. Any questions on that? Because that's the framework that we're in right there. You get a nice shooting star like this up here, you're generally going to exit. But again, a back up off of 5 EMA coming through right up in here. This is where you can kind of scalp, come right back in here. It's like, hey, I can't go short until I've got my 5 EMA white below this green 20 EMA. So here's where we start looking to go short. But then when we're bouncing off of this VWAP, and this is something relatively new from this group perspective, is we really haven't studied or understood the behavior, price behavior. What can we gain from understanding the behavior once we're up and away from the purple, the center, this VWAP? Well, is there benefit of understanding price behavior between the first band and this real thin green one, this second one? It's kind of range bound. We're below the second. So is that an area to possibly take some profits off the table? But what if this band is continually holding a support, and next thing you know, the majority of the session, you've got now a risk profile. Say, hey, if price is going to be supported by a deviation band, my risk is going to be, again, I love my 21 EMA, but my risk is going to be, hey, if I'm long off of this deviation band, my risk is just a few points below it. And what happens when we're a few points below the deviation band coming from the second? Well, now I've also got my other exit criteria. I've got my fast moving 5 EMA below my 21. If this follow through occurs here, now we know we're looking at that sweep, possibly back towards VWAP. So you've got all the other confluences that say, hey, now it's reversed. Let's get out. But when we're bouncing, coming up off of this VWAP here, I mean, any questions on that? The reason I'm kind of starting this week with that is because, and it's actually a little bit of Julie's fault, but here about a month ago, she was just kind of another trader that she really likes to follow, and they really focus a lot on the VWAP wave theory, and then like with volume profile, and so I'm like, let me put my deviation back on, and then I kind of listened to him a little bit, and it takes all this space out of the equation, meaning this is my VWAP now. If price is up above this first band, well, now this is like my new VWAP. I'm very much interested in how price is interacting with this, even though I'm very extended from here. It's huge.
Can I add something, Jake?
Yeah, please do.
I was going to say, if you turn on the session profile, the New York session profile, up above that deviation band, you're probably seeing a micro range where there's a value area low and a value area high, because that's just showing that the price has been accepted up there, and that's where it's working now. If that makes any sense. I don't want to confuse anybody, but
It does. But just me personally, try to keep it simple. I utilize one VWAP. Some people anchor VWAP to the US session, this or that. And I've got like my 5 and 21. And then the point of controls that they're just stacking on top of each other.
Right.
So there's a lot more study to go into regular trading hours VWAP versus the electronic, the full. I personally try to keep it as simple as I can. I've got VWAP that's tied to the session because when we throw in the
No, I was just saying that just to explain why it's not going back into the deviation, back down to the VWAP. That's just where price was accepted. That was
oh
all I was saying. Yeah, you don't have to turn it on or anything, but um, that's why it wasn't going back into that down below back to the regular your VWAP. Is if I had to look, there's going to be acceptance of that price there. The point of control is going to be up there.
yeah,
Everything's going to be up there.
yellow line is point of control.
Yeah.
And so those are definitely nuances.
Yeah.
And
It was
that's
shown. You just showed your volume profile. I could see it, even though it was
Yeah,
blowbacks.
that's kind of where these
Exactly.
yellow lines. So that's
Yeah.
definitely another conversation. But framework is what I really, if we can just identify framework, price did not come back down to VWAP within our 15-minute opening range. So what do we deduce fairly early in the session? And right here, we're like, hey, price has found a new area that it wants to work in. Absolutely. And to me, it's as simple as, hey, I'm staying above a 21. I'm staying above this regular first deviation VWAP band. So, hey, I can't short. Price is comfortable up in this area. These pointed controls, a lot of times they don't really populate until much later in the session. So all we have to work on is really price behavior, price structure. What is it doing now? What is it telling us? We can go out and find all kinds of things that it's that are working as magnets, but for this particular conversation, what can we do in the framework of the only things that we've really talked about in this group to try to keep it simple? Say, hey, what works for Anthony, um, as far as what he executes with, what Jake does, what Julie does, what Michelle, what Kevin does. Um, there are variances from size to, is it a 2 minute, a 15-minute time frame, 5 minute. But when we spend energy to master a, is there some value to understand price behavior up and away from a 15-minute opening range upper limit or down and away? Check the box. To me, absolutely. That is number one thing within the first 30 minutes I'm determining. What is price doing up and away or down and away from that 15-minute box? Okay. The second thing is now what is it? Really, it's a 1 hour mark. So here's our initial balance high. 1 hour is another big one. We run into some resistance right here. So from our 15-minute upper limit, we were bullish for that first hour. But now we have to start saying, okay, if this is the 1 hour mark, what's happening here? So now I've got two major time frames or milestones that the US market as a whole, people are making decisions. And so I want to understand what's big money doing. Can I be part of those decisions? Now we're starting to fine tune. If this is the 1 hour mark, this is our high. Well, VWAP's clear down here, and we've kind of got a deviation band here. Is this now start to tell us, hey, what can we expect at least up until lunchtime in New York? Price has moved up here. This is where price is hanging out. I don't want to fight it. I don't want to fight it. Price is comfortable up here. It's like in balance. There's no big candles, long candles that are really coming in to frustrate. In other words, the bears are not really that strong in here. So any comments on that 15-minute, the 1 hour, we see big money right in the middle of the 15-minute range, right off of our VWAP, comes in. Here's our 1 hour mark. And now we should be comfortable with follow-on trades for the rest of the day. We're looking for pullbacks. We're staying long. Price is staying above this deviation band up above VWAP. We can assume it's going to stay up there. And a lot of times it's generally until that lunchtime or that power hour. Are things going to come back down into VWAP, into balance? It could. And we've got exit criteria that we're looking for to see that. But that's a framework that, man, I'd say in 8, 9 days out of 10, you follow that framework, you manage your risk, you're going to be profitable. Just spending your time within, that's the framework. That's the larger, bigger picture. What are we doing outside that 15? Can we trade to that first hour? I want to assess that first hour. Are we going to break and retest, or are we going to roll back over, come back down into balance? Who's in charge? The bulls or the bears? We've all got EMAs, moving averages that we're looking at. But one thing about the VWAP deviation bands and VWAP is they're not constrained to, they're consistent across whatever time frame. So that's another plug for why a VWAP profile can really aid in your trading, because if you're wanting to execute on a 2 or 3 minute time frame, but you really are comfortable with making sure I'm never going to go against a 5 or a 15, but I want to execute on the smaller, hey, these VWAP bands they're the same regardless of what time frame you're on. Candles are going to look a little bit different, but where VWAP is and where the deviation is relatively similar. Any comments on that? I think I don't know how different, or as simple as we can keep it is, I've got my execution 5 EMA. I've got a slower 21 EMA, the relationship of the 5 with the 21. Bottom line, never going to go against those. But now, because we love VWAP, and we know VWAP is a very significant indicator on all time frames, when we add in the overall VWAP theory and the deviation bands to aid, especially after this first hour, we start really paying attention. Hey, are we going to grind back and forth between the second and the first? We come over here yesterday, 15 minutes, opened up bullish. This was a beautiful bearish signal. Here's our 15 minutes. This is the most beautiful rejection from a 5 EMA, beautiful shooting star. And when we go below VWAP right here, it's game on. All the way down. And here's even the first hour. So now your consolidation, you got your Anthony Wicks here. It's trying to come back up to VWAP, but we can't have a single candle close above this deviation band, let alone the fast-moving 5 EMA. That was very significant. And once we break through that again, now I'm looking left. saying, okay, are we going to go to the previous day's low? And we just went through the previous day's low like it was nothing. And now so here's our 1 hour right here, indecision on a 5 minute time frame. And we just stay below the fast moving 5 EMA. We're below our deviation band, and we really have no reason to get out until down in this area. And now, of course, we've got the sideways. You got a nice double bottom, well, triple 4 times we hit the bottom. But I think it was a Julie, I think I was done right in here. I was like, I'm done. I wasn't even going to mess with, because once we had, and it was actually Fibonacci. He's my friend. You guys know Fibonacci? But a lot of times we throw Mr. Fibonacci in there. I like it on Trade Evade a little bit better. But when we can't even get 25% of a retracement, I got this backwards. Apologize. I'll usually use it on TradingView right here. So I don't have everything listed, but this was below 25%. And I think you've heard me kind of share that number. It's like majority of the times when you don't even make like 25, 30% here, you can generally expect a very bearish to sideways the rest of the day. Generally, some lower lows are going to come in. It's when we get up in this 50, 60% is generally where if we do get another pullback, there'll generally be a higher low in there. But we were done pretty early yesterday. But the whole thesis of the trade was 15 minutes, bullish rejection, 21, 5 EMA. And then when we stayed below this first deviation band the entire time, there was just no decision to be made. Just looking at understanding VWAP theory and utilizing this first band, there was just no decision to be made. Just like let it go until this band no longer works as resistance. And then at that point there, you're just going to be going sideways. So that's a good place to, if you're profitable, that's a good time to get out. The majority of the movement for the day was over in this first 2 hours. So if you're able to trade in the first couple hours, that's a reason to be done. If it's a couple hours before you come back, now you're just looking at, hey, here's my second band. If I'm expecting a return back up to VWAP, I've got to be patient enough to wait for these retests of these lows before I consider going long. And then we hope what our goal is, our target would be this deviation band here. But we have to be patient to say, hey, this is known support. I'm below VWAP as a whole. Probability is I'm going to have some moves up, but we got to be patient and get in at the low. And then we can scalp working back up. And that's the only thing that saved me today is I did not get in. I was really wanting to get in down here below this second band. I missed it here, so I was expecting one more retest, and then I was going to go long. It never happened, so I actually waited to trade today up in this area. And then I was able to scalp coming down a couple times, but ultimately it kind of got away from me, and I had to wait. I closed out over in here, and I was down basically just about 10 points. But I did what was, I guess, a good news from my perspective, because instead of trying to get into VWAP but getting in here, I actually waited till I was up above and breaking this second deviation band before I even went short. And that was my risk. And so I did not lose that much today because I went for the second deviation band to execute my fade back down to VWAP versus red candle here, I'm thinking, okay, here we go. We're going to go down to VWAP. Boom, immediately it goes against me. So because I was wanting to play short back down to VWAP, I waited until I was back up to the second band because price would not hold up above the second band either, which again is that's a nuance. That's something, hey, we're not in a really strong bullish trend when price is not wanting to ride up above that second deviation band. When the second band becomes support, hey, you're probably going to be making some new highs, for the majority of the session. But we were staying below the second band and just coming down to the first. Anthony, what you think?
Yeah, so I've been trading the last few days Globex. So I've kind of been missing the New York. Because what I've also noticed is some volatility in other words, you see some of these candles, the body, so it's fast moving, and there are definitely strong movements. Uh, and I don't trade when it's sideways anyway. I'll just wait because I don't want to take the risk of predicting the market rather than paying attention to movements. So I'm trying to be real cautious about really just forcing the market to move in the direction I want it to move into. So that's where I've been trading like the Globex. Um,
How do
and the
you
other thing,
how are you assessing the direction, in Globex? Because
so
and the
I'm
reason I
looking
ask
at,
that is like, we tend to
yeah,
have a little more volume in the US market, and Globex is obviously you do it in the morning, that pre-market,
yeah,
and there's a lot of value there because um, other than you got the 8:30 Eastern Standard Time, more times than not, you've got a news catalyst. You've really got to be careful. But come, 7 in the morning Eastern Standard Time and later, yeah, I've thought about it. It's like, man, there's so many times I could be done, by 5:36 in the morning. But anyway, I don't mean to cut you off there, but I'd love
yeah.
to know.
No, no. So the other thing is I've been working on like the PA account. Um, just to say, 200 a day is enough. Especially if you turn around and get the lifetime. I'm not paying monthly. Um, and so at 200 a day, there's 20 trading days, that's 4,000 in the month. So, when you're looking at the maximum in the beginning, the first few withdrawals of 2,000, 4,100 is what you would need, you know. So I've really been trying to focus on that 200 is enough because what I have found is trying not to overtrade, trying not to be greedy again, because 200 a day, like I said, is enough. And I'm really trying to focus on micros, not to blow the account, but try and keep the account. You know, for me, I think the challenge is, take the eval and get into funded. Yeah, I can do that all day long. The question is, how long do I keep the funded account?
Mhm.
You know, um, and I think for me, that's the struggle of can you keep it for 30 days, 60 days, that kind of thing, the longevity of it all. Um, so that's, you know, so I mean, I look at the New York, but I'm not always trading it just because, a lot of times and now I've noticed really you want to trade the first 2 hours because after that, I think your big movements are over with. And I've said before that power hour, I am no good at that. power hour. So I just stay out of it.
Mhm.
I have found more often than not, I'm always trading against the trend. Especially in the last 15 minutes. There's usually a correction for the day. Um, Not always, though, lately. And then as I've said before, is I'm looking at the politics of it all, and there's a lot of that going on. Um,
Yeah,
so
State
that,
of the Union today,
yeah, it's
consumer
tonight.
confidence this morning. I was really expecting, again, part of my reason for putting all my energy into that, coming back into the middle of the chart, was people are going to wait. There's a lot of indecision out there, because State of the Union, the NVIDIA tomorrow is another major catalyst from the AI sector and the tech sector. So tomorrow, it'll be very interesting, but just got to be really careful. Come 12 o'clock,
Yeah, yeah,
or
and
should I say 4 o'clock tomorrow if you're still in, because the
yeah,
CME is still open through the earnings. You're gonna really have to watch that because it's gonna go crazy.
yeah. And now, with AI, the uncertainty of how far is AI going to go,
Yeah,
and there's that uncertainty, job creation or loss thereof. Um, and a lot of companies have taken a hit, in the last couple of days, um, just for that conversation alone, who are heavily involved in AI. So,
yeah, and and just along those lines, it's fun to see that. Hey, sometimes we're very bullish. Night times Globex, and you wake up in the morning. She comes down, and we've had a couple days where it's very bullish in Globex, period. And then US market is nothing but bearish.
mhm.
What I like in this conversation is I like the fact that we are not in a bear market, meaning nothing has given us anything to say it's falling out. We had early last year, we hit the 20% drawdown ES from all times high, which is defined as bear market, but it was only like one day. And then she shot back up. And so we never did officially enter a bear market last year. But by definition, we hit that 20% retracement from the all-time high. And so that was as close as we got. We've been in the last couple of years. Um, so, but I just say that because I love how your approach to that pre-market. And those candles, and I'm going to share. I'm glad you said that because can you guys see Tradevate now
Yeah.
versus TradeView? Okay. Um, this is all I have on my chart, and this is what I execute with right here. I've got 5 minute time frame. I've got all those lines and stuff on TradingView, but this is all I'm going by. This is a 1,000 tick chart. I look at my 5, I look at my 15, because that's framework. But here's a 1,000 tick, and what I've got built on here is these red lines come out. This is automatically letting me know, regardless of what time frame I'm on. Here's a 15 minutes. So here's our lower limit of 15 minute, and once this flat lines, hey, there's my 15 minute. Um, but you mentioned large candles.
Mhm.
We were in a time where 5 minute was wonderful. It seemed like the volatility wasn't there. And so I got a false sense of confidence in a 5 minute time frame. And I'd been using ticks for a long time because it just allows me to have a better sense of what's going on. And it takes a while to adjust. You might start off with, I mean, 5,000 is almost beautiful, and it gives you that same type of tempo that a 5 minute time frame would. But a 3,000 or a 2,000 tick is also pretty clean to work with. But what I'm trying to drill down to is I got comfortable with 5 minute and then got away from the ticks. And we had last week, Monday, Tuesday, where the market US session started really going weird. From a smaller size, assessing the low of the day, getting in, it wasn't that bad. That IBL, IBH, kind of what that market was doing around the 1 hour, all those were pretty good. But the candles, Anthony, you said it 3 times tonight already. They were just large, and they can throw you off. And I had 2 losing days in a row last Monday and Tuesday. I lost sense of my confidence got shot. I ended up, I lost a couple accounts, but the large candles on the 5 minute time frame were so quirky. So that Wednesday, I'm like, wait a minute here. I have been executing very clean, and if I'm on like a 1,000 tick or 2,000, it doesn't matter. I mean, it does, but when you clean up your charts and you're kind of looking, hey, here's your VWAP, your deviation band, your second deviation band. You see those big, crazy 5 minute candles? We're not seeing them here. Here we see them.
Yeah.
See, this looks kind of rough. How do you really trade that? Well, follow through above 5 EMA here is a good one. Trapping bears here, bounce off the deviation band. Hey, there's 5 points. Above 5 EMA, you can do it. And that's really as long as this is happening on my right monitor, then over here is what I'm really looking for. So last Wednesday, and I think I shared this with Julie, it's like I've gone back to my ticks because each candle represents 1,000 transactions if you're on a 1,000 tick chart. If you're on a 2,000 tick chart, that's 2,000 transactions. So you're getting, if the candle builds quick, you've got high volume. Now, here's the most beautiful thing. I just want to pause here. I want to see if there's any questions here. Is this look, and the reason I want to pause here, and we haven't really talked a lot about ticks. And I think it was a few months ago. It's like, hey, we'll come back around to it. Now I'm very much sold on ticks because it allows me to see what's happening within that 5 minute candle so much better. The ticks filter out those large candles on our time frames, 5 minute time frame. Now you might have a lot of candles come in, but when you start like at around 3,000 and then you get down to where you're maybe comfortable with 1,000, you may do 3,000 for the first hour. You may even do 5,000. But when this volatility slows down after the first hour, 1,000 tick becomes very comforting to trade in. Above our second deviation band, we're holding here. Here's like a double bottom. These signal candles that come in, and then a retest back to your second band. All you're worried about is 2 lines on the chart. And you'll see that over and over. Here's our first 15 minutes, all the way back down to the second band, back up to VWAP. VWAP becomes support. This is so much information in slow motion, believe it or not, even though it's 1,000 ticks. But this right here, VWAP, big money, is holding above VWAP for the day. What can we assess? It doesn't matter if we're in Globex or US market. Where's big money wanting to hold up here? Let's see how valid that is. Let's look at Globex. Okay, second deviation band. This is 8 p.m. This is midnight Eastern Standard Time. Here's what, 5 in the morning Eastern Standard Time. So where do you usually pick up, Anthony?
I usually start at 6:30 a.m.
And that's Eastern Standard Time.
Yeah,
So that's really like 2:30. That's right in here.
yeah. And so I like to be done by 8:30. Now I will look in the evening. I'll see like 9:30 p.m. So the first, after the first 3.5 hours.
Yeah, so that's around 5:30 p.m. right in here. My time would be
Yeah.
9:30 p.m. Eastern Standard Time.
So I look for some volume there too. So those two different time frames is where I'll look.
This is where that London market, I think, kind of starts opening
Yeah,
up.
yeah.
And here's what's beautiful is we can talk execution, candles, US market, below 5, below 21, below the deviation band, rejection from the second, messing around with VWAP. We come down to this first band, we come up and see VWAP holding. US market, we should write down 100, stop trading, pull out a notebook, and write down 100 times as fast as we can. I will only go long above VWAP. I'm only going to go long above VWAP. Because that's what we're learning here. And we even get another confirmation when we break above this band, and then we kind of retest the band and we go back up. And then price stays up here the rest of the day. Let's go over to Globex. And Michelle, I hope you're feeling a lot better in the next couple of days. But again, I love what Anthony's opening up for us, because some of us have different hours to trade. How can we execute within the same framework, regardless if it's Globex or US market? Is there a framework where we can manage our risk and clean things up a little bit? So if I'm pre-market, what can I deduce here? Hey, I'm above VWAP. Okay, I'm kind of coming off of the second band here, so I'm going to respect this second band, but a pretty big move up off of VWAP. But I'm not making it up to the second band. Back down to VWAP, back up to the second band, back down to VWAP. Okay, we're holding above this second band. We're back above VWAP. How many scalp opportunities off of VWAP just to this white band opportunity exists from 5 in the morning Eastern Standard Time clear up to after 7? Hammer, this is a 1,000 tick. We still get our hammers and we still get our shooting stars when they come in right here. Almost up to the second band, shooting star. There's a 5-point win. Bouncing off of this deviation band. Now we're
Jake, do you feel like the opposite color engulfing candles are more prominent when you change the candles to ticks? Because I'm looking at this chart right here and I see several engulfing candles, opposite color engulfing candles.
um, if I understand your question, um, because here's here's an example, an engulfing
Yes.
candle.
Yep.
Okay, this is what's beautiful about ticks. What is this on a larger time frame, especially when this candle comes in? This is a hammer. When you combine wick coming down, it's coming down. Now bulls show up, they're buying it back up, and now you've got kind of a thin top relative to these candles. Even though we don't know exactly which time frame that is, but that engulfing, this is a signal candle. Um, I've got some pretty cool screenshots from last Wednesday where I was just training with one micro, but on pullbacks, engulfing candle, I'm looking for that signal candle. And then in theory, I like to see another bear candle come in as a retest, then boom, I would get in above here. That's Does that make sense? In other words, that's how I would execute my trades within the framework of this VWAP. If I'm Globex or if I'm New York session, here's a signal candle. These engulfing candles, Kevin, great observation, because that is a signal that, hey, bulls showed up. And like if we're looking at a 5 or a 3 minute time frame, in all likeliness, we're seeing a hammer here. We just
Yeah.
happen to see a hammer here on the 1000 tick.
And even if you go back to like 8:06 p.m. there, I mean, look at that high right there. And you see that opposite, the red.
There you go.
I
Coming
mean,
off
that
of this
that seems to be
second,
a very strong signal candle to me.
that is exactly right. We're coming off of this second derivative band of VWAP, wicks up, signal candle. You're exactly right. Then you get a nice green candle that makes a lower high, plus it's below the 5 EMA. The 5 EMA is just as beautiful, if not more, on a tick chart as it is a 5 EMA. The bulls
So,
cannot take out this signal candle. This is confirmation that this is a valid signal candle. So when price comes back down through here, you can actually get in here, and your goal, your target would be, hey, I want to see it hold below this first deviation band, but hey, can I go back down to VWAP? Because here's your VWAP earlier. Can we come back down to, again, big money, logarithms, bots, what have you? Are they just kind of looking to buy again at VWAP? How many times are we able to bounce off of VWAP and go long? Here's another kind of engulfing candle, rejection here, back down to VWAP, hit a target. Well, it just happens to go through it like butter. You get rejected at VWAP with this candle, but again, this is already in motion. This is a big move down, so this is not a signal candle anymore, but it rejects below VWAP. Again, we're below the 5 EMA, every one of these candles. Here's your first indecision. I'm exiting here. Here's a big signal candle. Oops, big signal candle. However, the next candle is bear. We do not, and it retests, but it fails.
so do you feel like when you change your candles to show these 1,000 ticks, for example, that the candles are giving you those reversals? They're more prominent than they are with just, timed candles.
However long it takes for like 1,000 transactions is really the time frame we're looking at. We're just on a different fractal,
Okay.
you know. However, within this 1,000 tick, when that volume picks up, now we're having a little bit better insight of what's happening on that 5-minute hammer that we're looking for. Let's see if we can't map 8 p.m. to around 3 a.m. on the 24th on TradingView on a 5-minute time frame, and see if we can't explicitly kind of drill down and answer your question. So here's the 23rd. So here's the 24th. Here's 8 p.m. So here's kind of a 5-minute move up indecision. So here's 10 minutes after 8. So again, pretty strong move up indecision. And then we've got some good follow through back down to this deviation band, back down to VWAP. And so here's that on a 5-minute time frame. You see what it kind of looks like right there?
Yeah.
How could I put these side by side? Let's look at okay, so this is what we should have done. So there's 7:13 p.m. Okay, here's our 8 p.m. on the 23rd. And that's 8 p.m. on the 23rd. Okay, so these are, I'm not able to hold that up there. It's kind of snapping down. We're gonna have to kind of leave it right there. Okay, so we can kind of see the cursor here. Wish I could lock these
Turn
in
the
place. If
auto
anybody
fit off
knows,
on that
say
5-minute
that
chart.
again. Say
If
that
you go
again,
to
Julie.
that square where it shows all your settings, right there, click on that auto fit chart, turn that off.
That's what I've been looking for a week, Julie Bean.
Yeah, I struggled one day.
Okay, fantastic. Because in the replay mode, I was not able to. It's still popping back.
That's because you didn't turn it off. Click on that. It should open it up. Well, that's weird. Continuous auto fit. Sorry. Off.
Oh, fantastic. Good job, Julie Bean. Okay, very nice. Okay. Now, Kevin, I love what your question, because now we can come in and literally look kind of back to the whole reason we went over here, but look how large these candles are on the 5-minute time frame. You know, where do we take profits here? It's moving down. That's a big move down. So if you look on the right side, big move down. Where do we take profits? Now look on the left side, the same section. It's 1, 2, 3 different candles. We already are pretty much comfortable to target this low right here. You know, let's just say if we're in a trade here. But if we're red, all of a sudden I'm trailing my stop on the top of each of these candles. I get stopped out here on the left side. Well, it happened to work out here. You're really going to take profits right there. So we're seeing
Yes.
a lot of the same stuff. But here's a shooting star follow through. It just goes. You're seeing a lot of this.
So when I look at these two charts, what I'm seeing is when the market does a reversal, I'm seeing a higher frequency of engulfing, opposite color engulfing candles when the market reverses on the left-handed chart. When I'm looking at the right-handed chart, when the market reverses, you don't always get that engulfing candle. Like right there, see how we
It
hit a
was
new
10
low?
minutes for us to engulf this candle. We're
Yeah.
over here.
You have
Hey,
a
it was just 1,000 transactions and it was really fast.
yeah, so my question is like, have you noticed when using the 1,000 tick candles as an example, do you have you noticed that those kind of engulfing candles are more prominent than just in a time candle chart?
They are a lot, and especially when we start, even when the volatility kind of slows down. If you're on a 5 minute time frame, um, when you don't have a lot of volatility, let's see here if we can, because this is a signal candle that we get really quick. 11:52 and 19 seconds. And this is this whole candle is 4 minutes later. That's 11:52, 11:56. So there's still about 4 minutes right there. Over here, are we at the same? Okay, so that's right in here. So if you look at the 5 minutes here, this is again just textbook reversal criteria, even on the 5 minute time frame. Um, what again, it's 5 minute is really good. And so let's kind of piggyback off of Anthony. He's trading these 5 minute candles here in theory, and look how much cleaner it is. And then our 5 minute candles over here in the US market.
Yeah.
That's really I think kind of what Anthony's kind of highlighting for us here. Because now we come in US market on ticks. A lot of this first 15 minutes, I'm not so much looking for a specific candle at this point here as I'm waiting to see what price is doing as it pertains to VWAP and this first 15 minutes.
Okay.
Okay, now, yeah, we're coming in here. This is only 6 minutes after US markets open. Get a signal candle. Nice retest here. Hey, is this potentially the low of the 15-minute range? Could be. And now we get some volume that kind of comes in. And if you look over here on the right-hand side, you do see that engulfing candle on the 5 minute time frame. Well, on the ticks, we got a beautiful signal candle here, but reasons to be patient. Hey, I want to confirm the price is going to hold above this second deviation band. So the fact that I get a nice retest here, and now I'm breaking above 5 EMA, 21, and this band, I'm absolutely happy to at least throw in a micro in this area. Absolutely. So if you look over here, I'm just getting back to VWAP. I'm not in such a big hurry to add a micro, just studying the 5 minute candle on the US market open. It doesn't give me enough information. But over here, below 21, engulfing, red, indecision, higher low, follow through right here on the 1,000 ticks. Now I'm happy, and my only risk is actually down in here at this point. But
Yeah.
I'm getting a lot of information here that I cannot get from this 5 minute candle here.
Yeah, and how I feel sometimes is like when I see a reversal like that, and I'm waiting 5 minutes for that candle to confirm, I may have lost a whole bunch of movement already in that reversal range. So like I'll get in and I'm like, okay, there's a perfect good reversal, engulfing candle. We got momentum going back up, but I'll get in and then all of a sudden that momentum dies off. And see what I'm seeing on the left-hand chart there is that you get that indicator sooner in time, and you can set up your trade, get in, and you have more of that movement to work with than in the chart on the right.
You get a lot more specific transaction-based information. In other
Yes.
words,
Yeah.
1,000 transactions right here tell me a lot about the previous 2,000 transactions here.
Mm-hmm.
So these 1,000 transactions just engulfed these 2,000 transactions. So the buying pressure was a lot stronger than the selling pressure. Beautiful retest here. And this is where when you start going to the ticks, you're going to be amazed when you start executing trades with a lot more precision. It's like, hey, I'm going to target this band here and then see what happens. Okay. All right. Maybe I missed out on it. Maybe I got out a little bit early. But now I'm going to see and hold signal candle right here above VWAP, a retest, signal candle, a little retest here. Here's my entry criteria. You're going to have a lot more opportunities, objective based, by understanding what's happening within these 5-minute candles by looking at these ticks. And what you're going to find out, you can make $500 days with one micro. That almost sounds crazy.
Thank you for bringing that up. I've never considered changing my candles to ticks. So that
it takes a little getting used to.
They're fast.
Say that again, Julie.
They're very, very fast.
They can be. They can be. In time, they will come across as slower. But what you want to look at when they start moving fast, hey, why are they moving fast? Because there's a volume spike. If they're not moving fast, then there's low volatility. But when they start moving fast here, I mean, again, you're looking at let's just go from 535 here. So 535 is this candle here. So you got this 1 5-minute candle. Well, at 535, we're starting here. So here's like this little wick over here on the right is these candles right here. But how many candles are going into just this wick on this 5-minute time frame? And then here's that big bull move up.
Mm-hmm.
But now I'm back above a 5 EMA. I'm back above a very significant second deviation VWAP band right there. So even though they might be moving fast, I'm looking, and again, I'm still within my first 15 minutes. I'm not locked in or dialed in, and I'm not expecting to be done trading in 15 minutes.
Jake, I have a question when you have a minute.
So what I'm looking at here is I'm trying to see how do 1,000 transaction candles, how are they going to be interacting with the VWAP theory? When can I say that I've got a higher low at play? And where am I in relation to my VWAP? Now I'm back above this second band. We go up, we bounce off the first band, and then we go right back through it, all the way up to VWAP. And now we go all the way up to the second band. And now we're back down, rejection at the band, signal candles. A valid target is this deviation band. Indecision, rejection at it again. Next valid target very well could be your VWAP. Go ahead, Julie.
Yeah, so I noticed that you have the EMAs on your tick. They're not at the same levels on the 5. So they're moving faster on the tick chart. So you still use your 5 and your 21 on the tick chart.
Absolutely. Absolutely. That 21 on a tick chart is probably the most valuable risk mitigation that I've got.
I wonder if that would have helped me this week. Because
yeah, 21
I
on
was
a
looking at
tick.
the EMAs on the 5, so I in late. I mean, it was not pretty.
Yeah,
But I just happened to notice that you've got the EMAs on both, and they are
absolutely.
definitely different.
Back to kind of Kevin's point, because the 5 EMA, it's just taking the last um, 5 candles and it's producing a line. Here it's the last 5 5-minute candles. So here it's taken 25 minutes for it to really populate the 5 EMA. So it's a lot slower moving 5 EMA over here. But what I'm finding out, when my 5 EMA on a 1,000 tick, 2,000, 3,000, this is kind of getting to your 5,000. In fact, let's just show 5,000 real quick, because Kevin, I would encourage you to probably start larger a little bit. Start understanding, hey, you're looking at volume as these candles are painted. But here's a 5,000 tick chart. Here's again, first 5-minute candle, second 5-minute candle. Here's our 1, 2, 3, 4, 5, 6, 7, 5,000. So again, you can see the number of transactions. 1, 2, 3, 4, 5, 6, 7 times 5, 35,000 transactions that we're actually able to observe on a 5,000 tick chart here, just to get to this point over here on a 5-minute time frame.
Yeah.
So 5-minute larger time frame, again, it's a very powerful framework to respect. But if we want to have a better way to understand, hey, what's really happening here, we're able to watch it play out over here. But back to Julie's point, doesn't matter if I'm at 5,000, 3,000, 2,000. What makes my 5 EMA is going to be the last 5 candles. So a 5 EMA at the low of the day, the 5 EMA here is at 68.31. Here at the low of the day, the 5 EMA is clear up here at 48. But again, you got to realize this 5 EMA here is averaging the last 5 5-minute candles, where over here it's giving us the last 5 candles representing 2,000 transactions each. From a risk and an execution perspective, I will not trade short when 5 EMA is above a 21 EMA. That holds true on the 5-minute time frame. That holds true on the tick chart. By having deviation bands and executing according to like a VWAP theory, hey, this is a great place to take profits off the table anyway. We just come up here, took out kind of like a Globex high here, and we happen to get an Anthony wick with a beautiful signal candle. And now we're below the 5 EMA. Why not take some profits off the table? Over here, 5 EMAs clear down here. We're extended quite a bit for us to meet exit criteria. We need this green candle to get trapped and then the follow through. So really it's over in here. So if you look on the left-hand side, over here is where we kind of meet exit criteria on a 5-minute time frame. And again, it kind of goes back to Anthony's point. These candles are pretty large, especially now that we're in the US session over here. But it doesn't matter if the 5-minute candles are large. Now I'm more interested in, hey, what happens every time 2,000 transactions print on my chart? And what's happening to those 2,000 transactions printing on my chart? I still got my visual. I've got my exhaustion candle. I've got my signal candles. I've also got my second deviation band here or right here. Rejection from that, rejection from it here. But I've got a little bit more precision. This is kind of where I'm going into, hey, when you start getting a lot more precision entries, precision exits, you'll be amazed at what you can do with 1 micro. Was it last Wednesday, Thursday, and Friday, 1 micro, Julie? I got 500 on all my accounts, just trading 1 micro. Now, I caveat that where signal candle comes in here, I might have 1 micro, and then before I take profit on it, this bullish move, and then I get another retest here, and I'm back above VWAP. I'm adding a second one, and then in Tradeovate, things don't combine into one take profit. On Tradeovate, every trade stands on its own. When it hits 5 points on that trade, if that was the bracket order, it will close it out. The second order, if it was for 5 points, it's locked in at that 5 points. That's another thing I like about Tradeovate versus Ninja. Ninja, once you add a second one, then it averages that take profit, or it combines your take profit. You got to kind of close the order out, go in, and put it where you want it. Of course, I don't trade in Ninja enough. Maybe there's a better way to do that, but I just notice I have to manage those trades in Ninja. Where Tradeovate, every trade stands on its own based on whatever bracket. And I like random, whatever bracket that I've got, there's my 5 points. And I kind of got my stop out of the way, but I get very nervous at 7 or 8 points on a loss. I start questioning myself, hey, should I be in this trade anymore? But here's my default bracket. And then I move my stop up to where, like if I get in right here, if I'm in above this signal candle, well, that's 56.33. Well, down here is 48. So that's just 7 points. I'm wrong if I'm back below this deviation band. So even though my stop would populate here as soon as I entered that order, I'm just grabbing it and I'm dragging it right up into here. But that's kind of different conversation. But to your point, Kevin, and I think we even kind of bring in some of Anthony's secrets, looking at even 5-minute candles US market versus 5-minute candles the last couple of hours here. Okay. Anthony's got a very, very valid point. How do we make this look more like this? That's where ticks can kind of come in. That's where I realized last Tuesday, I'm like, my goodness, I was getting chopped up last Monday and Tuesday because we ended up ranging a lot. We'd come make a lower low, make a higher high. It was pretty ugly 5-minute candles in the New York session. And I'm like, well, wait a minute. The last 2 weeks I've been doing very, very well. And I was trading my ticks. So I just went back to my ticks because this, to me, clean move down, nothing but bearish. Here's an engulfing candle, higher low, retest, signal with the follow through. Now I'm back to where I'm comfortable. I'm above my 5 EMA, staying above my 20. And it's like, oh, and I'm above this deviation band with some bullish momentum. I might as well go for VWAP. VWAP, I'm going to be cautious. Kind of rejects a little bit. Oh, it engulfs over this 2,000 transaction bear candle on VWAP. I'm going to stay bullish. That's what I'm looking for. Here, beautiful retest off of VWAP here, because here's a great signal candle. Kind of here's our trigger candle. Here's the signal, bullish movement coming in, trapping this hammer. Here's the retest, beautiful bounce off of VWAP. Again, here is entry criteria achieved on a 5-minute time frame, which happens to be so over here. So we're clear over here. We're clear up here where we just identified a few 1 micro low risk trades that we're able to get into over here. But on the 5-minute time frame, again, that's why this first 15 minutes is so important. A lot of times just wait. But when you start understanding what these candles are doing here, what's really happening with these 5 minutes, 1 micro, you're going to discover I'm only interested in price. Again, my 5 EMA, 21 EMA, but I'm really focused on price behavior between the second band, first band, and VWAP. Above VWAP, band rejection, VWAP support, rejection support, or support at this band, rejection at the second. Back down to VWAP, back down to this band. And now we're back above our 15-minute opening range. We never do come back down into that area the rest of the session. But now I'm looking at support, signal candles off of this first deviation band, signal candle here, back up to the second band, taking profits off the table. All right, can I come all the way back down to VWAP? Well, I'm at least to this band. Oh, good grief. Back above my 5 EMA, bouncing off of this one again. Guess we're not going to sweep VWAP yet. Can I go back to the second band? So the big takeaway, and what I've really, my mouth kind of hanging open really the past week, because I've switched back and forth, between minis for 5 points, 5 micros, and 5 micros on a 50K, which then I usually double the size on the 150K, so it'd be equivalent of a mini. But then when I ran into like last Monday and Tuesday, it only took a couple trades where, I'm going long here and then she shoots back. So then I go short here thinking, oh, we're going to come and retest the low. She shot back up here, just messed me up. And again, that's just not being very responsible for one. Understanding, hey, we're still within the 15 minutes here. Hey, why are you going to go short, when you really haven't validated rejection from VWAP yet? So I went back. I'm like, let me go back to the ticks because it's like for 2 weeks now, I've had 10 straight winning days. Why did I have 2 losers in a row? And I kind of was, wait a minute here. I've really been executing on ticks, but framework being the VWAP and what is price doing around the VWAP. And we could go in and add point and control these volume nodes because, again, Julie's growing miles an hour in the areas. What do these mean? And these are valuable. And again, there's some nuances there. But when we're trading 1 and 2,000 ticks, and we're looking at the framework of VWAP, but we've got a 5 EMA and a 21 EMA in there. Less is more. You don't need too much on your chart. I don't. This is essentially, this is all that's on my chart. This is all I'm really executing with right here. What is the relationship of white line to green line? How is price? I don't even really care about 5 EMA and 21 EMA because now I'm looking at price structure. How is price structure as it pertains to VWAP and these bands? I'm convinced relatively new traders can make a living trading by just executing within the framework of the VWAP and these bands. And then when we learn to say, hey, I'm never going to remain long when my 5 is below a 21, period. So 5 is above the 21. Even if I don't get in till here, I really have no reason to get out until I got to cross over here. Well, what you're going to find out is, well, if I got in here, I'm looking at a target. Hey, it's going to be this potentially this deviation band. Hey, I got indecision, signal, retest. Hey, can I make it back up to the second? Very possibly can, with my risk actually being down here. If I get another trap and I start rolling below my 5 EMA, hey, I was wrong. I was wrong. But the 5 EMA with a 21, there's our risk management. Price structure is really always behaving between these bands. On a very bullish day, when the blue line, the second deviation band can't become support, well, now that's a trend day. We see that from time to time. Many times we'll see the VWAP, we'll see the movement between lower deviation, upper deviation. And sometimes you'll have 2 hours of that. Well, if you get a signal candle, engulfing candle, Kevin, off of this deviation band, hey, you got a high probable setup.
Mhm.
And now we've kind of got our big bull move here, kind of a hammer coming off. But look at this signal candle. Again, even coming off the 21, we're still above VWAP. We get the follow through here. Nice little retest, but now I'm saying, okay, I'm looking at from the first deviation band back up to the second. It goes way through it, but again, I'm exiting into strength every time I take a profit within the VWAP theory. And again, another going back to Anthony is I think that's why I like him so much. Again, it's $200 a day. And when you now start having relatively quick target opportunities utilizing VWAP theory kind of as your framework, direction always determined by one, what side of VWAP am I on? Is price moving? Two, hey, am I above my 5 EMA and 21 EMA? But now I've got a lot more realistic profits. Hey, maybe it's just going to be 5 points every time. But maybe it's going to be some of the deviation bands. Exiting into strength. How many trades does Anthony need to make $200? He's only looking at a couple trades a day and he's happy. If you got 5 micros, you're looking at 2 trades at 5 points each, you're done. When you want to do some good training and potentially make $500 a day, if you've got the time, and it takes the majority of the session to make $500 with a micro, but execute within a very objective defined framework. What is price doing structurally around VWAP, considering second deviation band, first deviation band, second deviation band? White above green, white below green. White is holding above green, VWAP. There's a battle here, but VWAP is confirming support. Now we've got a reason. Our white is breaking above our green. We're long. White is staying above green. White is no longer above 21 here. I'm done going long. There's a probability I'm at least going to come down to this deviation band. Doesn't go through it. It consolidates, signal candle. Now white's back above green. We go back up to this high. It doesn't matter if you're New York session or Globex. The same framework exists 23 hours of the day. If it's Globex, the volatility is not there. 500 to 1,000 ticks is going to give you that same type of information that we're getting on the $2,000 and $3,000 ticks on the US market, let alone the 5,000. If the 5-minute candle is just too small, you really can't get a sense for what it's doing in Globex. That's where the ticks can kind of come in pretty handy. But we can trade fractals, meaning you got your 5 or 15, but based on the volatility, if you're in a slower time of session in Globex, we can zoom in and kind of execute our plan, because that's what's pretty cool is it doesn't matter. I mean, let's go to 500 ticks. Let's look at, we're still looking at the same chart. Remember this rejection up at the second? But here's 10 o'clock at night. Here's 8 p.m. 500 tick chart. Hey, I want to just exercise my discipline. I'm long. I'm not going to go long, above this second deviation band very long. I'm expecting it to kind of roll in. If this is support, that's a different story. But hey, here's an opportunity to either wait for a pullback to go long, or hey, do I want to exercise, 1-2 micro short? Can I go this kind of shooting star here on a 500 tick? This is a fractal. We're not going to see that on a 5-minute time frame, but I've got the follow through here. It's like, hey, can I get from 73.20? Can I at least get down to this first deviation band? Hey, 68.59. That's 5 points. And I'm training my brain to recognize transactions painting shooting star on a different fractal than a 5-minute time frame. I'm training my brain here to say I've got an indecision candle, but I've got a battle going on VWAP. I'm breaking above. I got a nice follow through here. Now I'm back above my 5. Look at this hammer, 500 tick hammer, but now my 5 is breaking above my 21. Hey, is it possible that I could get back up into this second deviation band? Keeping in mind, VWAP just proved to be support already. So institution, big money out there is already kind of let you know that, hey, the risk is definitely a liquidation below VWAP. But that allows us to go in and train our brains on engulfing candles, shooting stars, hammers, regardless of Globex or US market.
But Jake, is that on your settings? Is that anchored, or is that just?
Oh, great question. You talking about VWAP?
Yeah.
It's anchored to 2 p.m. or 6 p.m. Eastern Standard Time every day.
Okay.
So it's the session VWAP. I use that on TradingView. That's the only VWAP I use, actually. There are some benefits. I think it's too much for me right now. I haven't seen a need for it, but some people will come in US market, opens here. So here's VWAP up here. They'll anchor a VWAP from like the US market open and then kind of assess. Let's see how we do that here. So here's US market open today. You see this purple line VWAP there? Let me see if I can't even. Oh, wait a minute. I don't even need to do that. I think we've got anchored VWAP here. So US market opens right here. And see how that kind of put another purple line here? Let's see if we can't.
Yep.
Anchored VWAP. Let's make that, let's give it a different color here. Let's just kind of make it, let's make it yellow. All right.
So it's looking like a real contact, but I'm not sure if there's enough. I'm guessing the price, I'm sure, but it's not clear to me if the price in there.
Okay. So it was actually the higher one. So here's the session VWAP, this purple, and then from the session you got kind of the anchored VWAP. So I a lot of times I see that. I just see kind of a variation. It's offset. So I've not seen the value in that because of the overall VWAP tied to the session, that first band here, second band here, second band here. You know, where is it where's too much? I guess. But anyway, to answer your question, for simplicity, I 100%, I do not even really deal with additional anchors. When you have an extreme, like an extreme high, there's some value to anchor a VWAP at an extreme high, and is price going to continually stay below that VWAP as it fades back down? Different conversation, different strategy. VWAP is very significant, but I think for all intents and purposes here, I think it's very significant within the context of our discussions. At least what I do, I think it's my 5 EMA and 21. That's my bread and butter. 15-minute opening range. Yes, with ticks, I'm executing within this 15-minute range more often than not. But the reality is, I'm ultimately wanting to see, is price going to move? Like we come back down into it, retest VWAP. When we come back up to the upper limit of the 15-minute range, we're up and away the rest of the day. That is very significant because now it's like, hey, the bullish sentiment has been confirmed. Take profits off the table. You know, again, you're getting signal candles and reasons to execute here. Take some 5-point wins, but you get these pullbacks. You're still above your 15-minute range. VWAP is clear down here, but you've got on this fractal, again, this is 500 ticks US market. I don't go that low. When it's really slow, I have been down into 500 ticks on US market and see things a lot clearer of what's going on. But that's the exception, not the rule. But price action is most important above any indicator. And what I mean by that is, what is price actually doing as a whole? Take all your indicators off. What's happening? US market opens up, it's coming down. Well, now it's no longer coming down. But now, here's our first major pullback of the New York session. This is also becomes our new low of the day. Here becomes your risk for the rest of the day. Just a little breakout of the upper limit of the 15-minute opening range. It comes back down to VWAP, chops around a little bit. But now we have a very significant anchor point to say, hey, if I'm going to get in above VWAP here, here's my risk. This is all I'm risking today, period. And as long as price stays above here the rest of the day, I'm looking at going long, and I'm going to scalp longs. You stay in the trade when it's trending, but when you start looking at the fractals or the price behavior as it pertains to VWAP and its associated deviation bands, especially when you start looking at different transactions and the printing of candles, that's where that 1 micro, you can reproduce 5 points. I think yesterday I was 11 for 11, 5 points. 1 micro, low stress. Every single trade was low stress. And it kind of frustrated me because yesterday was just a $200 day, which again is a great day. But it's like, okay, if I would have done my normal 2 or 3 micros, I'd have been done a lot earlier and, would have hit my 500. But I like what we talked about today because we kind of, I believe, addressed why Anthony kind of likes Globex. And going back here, very clear, 5-minute candles here, 5-minute candles here. Which one do you think is easier to trade? Okay, makes a lot of sense. Makes a lot of sense. So over here, you've got to have price structure at play. Okay, here's my 15 minutes. I got some valid support around my VWAP. Okay, even though these are large candles, I'm going to trade long based on like my 5 EMA, keeping the framework of the VWAP bands kind of, I'm going to be executing in accordance with how price is behaving relative to those bands. That's on the 5-minute. But in all reality, this is just on my right-hand side. I'm keeping larger time frame always in my peripheral vision. But here's really how I'm executing. But keeping in mind that larger time frame is always in my peripheral vision. Because Julie stated very well, very accurately, hey, these candles can take off and move pretty quick. And that's where a lot of times, well, especially in this part of the session, I'm looking to see how these candles are behaving. I'm not really looking at executing yet here. I just want to see what kind of day do we got going on here. Once I get into this area here, yeah, I'll be looking for a scalp, but now my 15-minute just printed, still bullish. I'm not sold yet. Especially when you get this type of rejection at the second, I want to see how far it's going to come down. This right here was the most valuable information of the entire session today, in my opinion. VWAP, higher lows. We never came back down into VWAP again the rest of the session. And that's all within 45 minutes, just kind of observing this behavior. A lot easier to grasp what's going on here than it really is here, to be honest with you. You can execute your plan. The first valid trade of the day would be trapping this bear candle, this bounce off of VWAP, 5 EMA. I just don't have it on right now. Well, let's put it on. Trapping this bear candle, bouncing off of VWAP. I'm above my 5 EMA. That's a valid entry. All right. Any comments, value? I don't believe we're adding anything that should contradict or go against any strategy you're executing right now. When you consider ticks, hey, we're understanding that those are really kind of volume based. It's a number of transactions that now paint the same type of candles we're looking at on whatever time frame. Hey, are they bullish sentiment Or is it bearish sentiment? Are they engulfing? Are they hammers? Or is it indecision? So you're able to still get that based on transactions, not so much time. 5 EMA, if it's on a 1,000 tick or a 5 minute, it's still risk management and direction. If a 5 EMA is pointing up and away from a 21, it's bullish and you have momentum. If it's pointing down and it's below the 21, then you have momentum. It's bearish. But now that we understand VWAP theory, and maybe we are putting our deviation bands on there, hey, there might be more logical targets to achieve. I might take 5, 6 points if that's all I got for the bands. But with these funded accounts and drawdowns and a 200-day goal, I'm exiting into strength every time I take a profit off the table. You're looking at that maximized drawdown. You got more achievable targets. I hope this helps because I'm just sharing the stuff that is actually allowing me to finally manage risk and be consistently profitable. And I like how Anthony was able to take us into applying the same principles into Globex versus US market. Because like Michelle and a lot of others that kind of listen to these videos, they don't always get the opportunity to trade the first 1 or 2 hours of the US market. So I think what we covered today is, hey, there's framework utilizing different time frames or different tick charts where I can still learn to recognize those signal candles, engulfing candles, hammers, shooting stars. And it's like, hey, wait a minute here. I could actually apply some VWAP wave theory and combine that with, a hammer candle follow through above a 5 EMA that's above a 21 EMA. And now I've got an 80% win rate. That's a reality, I believe. You guys disagree, agree? What do you think? I get excited
I've
because I
had
think it's
success
valuable.
with doing the Globex as well. So like the evenings, after, Globex starts, first couple hours, I've had a lot of success with that.
The first couple hours of Globex.
Yep.
Oh, let's see, me. Yeah,
So
I'm in the
central,
replay. But so here's a good thing, trading view. Look at 1,000 ticks. If you really kind of go to your 1 minute time frame, you'd be amazed at how similar, I look at like a 1,000 tick chart. A lot of it depends on, again, how much volatility, but you're going to get a very similar printout like Globex. What's happening on the 1 minute time frame? What is price structure actually look like as it pertains to VWAP? Because again, US market opened clear down here. Purple line is our VWAP. Here's our first deviation. So we're continuing the same model that we had during the US market. Price is making higher highs and its support is this first deviation band. A lot of exhaustion coming in here. I wouldn't be surprised to see us sweep back down to VWAP. However, under these conditions, we'd just be looking for a good pullback. And once we get reversal criteria support, if it does come all the way down to VWAP, hey, do I get that hammer? Do I get that signal candle with a retest and a follow through? But what time frame, Anthony, do you probably spend more time looking at on that in that Globex in the mornings? I'm kind of curious.
Um, I look at the 5 and I'll trade like on the 3, or the 1, depending on, momentum. Um, but I do like the 5 minute. That's usually where I'm making decisions, is at the 5 minute. Um, and then I'll look at the higher time frames, the 15 or the 1 hour, just to confirm. Um, is there a reversal coming, or, again, it just helps me not be so complacent, because sometimes that happens, right? You drift off thinking, oh yeah, I've got this, and all of a sudden candles will come in, and you're thinking it's just a one-off, but yet what it is it's the reversal coming in. So I'm always trying to be careful for that.
That is so true. And it's interesting, you mentioned you really like the 5, but sometimes you'll trade on the 2 or 3. And that is just another way of saying, hey, I like the 5, but I find myself trading more on the 1 and 2,000 tick. You know, very, very, we're not saying something completely different, because we're wanting to have more refined entry and exits, and the smaller time frame kind of gives us that, but we're in agreement that, hey, it's the larger time frame, that really kind of gives us more confidence in the trend. Because if you just focus on ticks, you can zoom in and lose all kinds of um, bigger picture stuff. So it's a very good word right there, Anthony.
Yeah, I'm going to try the ticks chart. I like that. It looks cleaner. Um, so I'm going to work with that and see how that works.
It's interesting at times to look at from a cleaner perspective. Because here's today. You remember, I mean, there's the 5 minute opening range. Oh, that's 1 minute. Sorry. Okay. There's the 5 minute. Okay. Looking back on it, it's actually not that bad of a chart. It's actually a pretty good looking chart. I should have been bullish and been done trading right here by 9 o'clock my time this morning. But 5,000 tick instead of a 5 minute. Just to Anthony's point, look how clean that is. Indecision here, engulfing. If we decide to get in on the follow through here, we just move our stop at the bottom of every new 5,000 transaction candle. And you're not out until right here. And a 5,000 tick chart, you'd be amazed. That really, Julie made a very valid point. Sometimes they move fast. 5,000 in time will not seem that fast. And sometimes you'll go in Globex, you'll go a full hour, 2 hours before a 5,000 tick candle even prints.
Mhm.
But yes, there is some cleaner printing of candles that you're going to see when it becomes transaction based versus time based. Absolutely. And that's last Monday, Tuesday. I struggled and I was really thrown off. And I'm like, oh, dude, you've been staring at ticks for the last 2 weeks straight, and really was dialed in. And then I kind of focused on a 5 minute, and it threw me off. And a big candle come in the opposite direction, where looking at ticks, that wouldn't have been a big deal because the ultimate risk is like the second deviation band, and we're never near that. I had no reason of getting out of trades last week when I did, and it was just paper cuts that really got me. Really got me. But here's a 5,000 tick chart on today's 5 minute. This is our last action right here, and we're just repeating what we've already done. We're going to make this 5 minutes. Looking back, it doesn't look terrible, but look how clean this is through here. This right here is this section here. Beautiful rejection or exit criteria met, and we should recognize that here also. But this is pretty clear VWAP support. Again, you can trade objectively on both. And today really wasn't that tough on a 5 minute time frame. But if we jump back, good grief, let's just do it real quick, and then we'll hang up. I think it was let's just jump back to last Tuesday. So Tuesday, 17 Feb. That doesn't look that bad.
Hindsight never looks as bad.
It doesn't.
I've often found that.
Yeah,
You're like, how could I
this.
not see these things?
Yeah, I think I got trapped here. Big bull movement, didn't quite make it up to VWAP. So I got out, and then, or I might actually held on to it longer. And so then she comes and makes a lower low. So then I get out, took a big loss, and then boom, big bull move. That's what it was. Just pretty bad trading. Again, it was this bull candle, which again, that's I think your case in point right there, Anthony. These candles can be large, and it big bear move down. This just kind of comes in engulfs, and we did not have the follow through. But if you're short here, this could make you uncomfortable because you're probably getting out right in here anyway. And then you're a little hesitant to get back in short because you're like, hey, the bull showed up, so I'm probably looking at a retest here. And if you were a lower low here, I think I was gun shy. I never got into any substantial trade here. I was just, this threw me off. And so if I look at 17 Feb, I don't know if we can go back that far. So here's everything we talked about today. Below the 5, stay below the 5. Hey, we're already coming up off of this second deviation band. We're trapping the bears here. Hey, I think it's bearish. Take profits off the table. This is not too long to wait. Hey, I got rejection in my first deviation band. I could make a lower low here. Indecision. Hey, here's a good reason to take a trade. And here, you got to like zoom out, but it does kind of come back to VWAP here. But this is so much cleaner. This versus, well, I have to jump clear over. I don't mean to hold you guys up. You guys are probably bored. I'm sorry. 22nd. We're looking at the 17th. Okay, so right there's that candle. So yeah, I mean, what's easier to trade? This over here, or this is even 5,000 ticks. That could throw you off if you're waiting for candles to close. And that's one of my things is a lot of times I don't like getting wicked out. So a lot of times I'll wait for candles to close, but on this 5-minute time frame, waiting for this candle to close, when you're bearish, the drawdown is getting very uncomfortable there. Here, back to kind of Kevin's point earlier, hey, you've got very clear engulfing exit criteria achieved. Here, exit criteria is achieved after you've taken a lot more of a loss than what you want.
Exactly.
You know, unless you've got your stop above this candle, which you can, but how many times do you get wicked out and then boom, 20 points? So I've learned to actually kind of be a little bit more patient, wait for candles to close. In the bigger picture, it actually pays more. But when you're printing 5,000 tick candles over here, you don't have this type of drawdown. You're seeing what's happening on a much smaller fractal. So that's ticks. So I'd be very curious in our next meeting, Anthony and Kevin, how it affects your trading. I think most important is you don't really have to change your strategy. You know, what is your existing entry and exit criteria? But you're going to get a better sense of what is happening, you know, on a different fractal than the 5 or the 15th. But consider the power of the VWAP. Doesn't matter if you're Globex or US or the New York session, and it's not just VWAP, because VWAP today was not in the equation, but the deviations from VWAP absolutely were. And you're going to see that in Globex, and regardless of what time of session you're in, those different bands. In other words, execute your current strategy with candles printing above your fast moving EMA, whatever your entry criteria is, hammer off a support, especially when you've got support off of a second deviation band or off of a first band. Let that aid as you begin to kind of retrain your brain to look at tick candles, even though it's really the same candles. But I think you're going to find the safety is going to be, hey, I'm trying something new, but the overall price structure, the safety net of understanding, I'm zoomed out, how is price behaving as it pertains to the deviation bands and VWAP? How is price behaving? Okay, now I can kind of zoom back in. I'm looking to execute long based on bigger time frame, bigger picture says second deviation band is clearly support. First deviation band is clearly support, or VWAP is clearly support. Then you can zoom back in. What is your objective entry criteria? I'll be very curious how you guys do. So, all right. Y'all have a great rest of your night.
All right. Appreciate it.
Yeah.
Thanks a lot.
Thank you, Jake. Appreciate it.
All right. Y'all have a good night. Thanks. All right. Bye.
Bye.